just, I suppose, Bank of Ireland run this every month, and it's really useful to show, obviously what sentiment is out there. And for the third consecutive month, it showed an increase, which was, higher than the previous month. So again, bodes well for the business, I suppose, business sector across the country. Obviously, May, I think we saw the change in fortunes once the first restriction was eased on the 18th of May, moving into the 24th of May, when construction started getting back, and building sites started opening. Then as the restrictions eased into June, again, sentiment increased yet again for the second consecutive month. And then now again, it has proven that the services and construction sector is continuing to grow. And, the rebound that is evident, I think, across the country is there for all to see. So, I think it's useful information to have, and certainly, for many of my clients and indeed brokers, it's useful information to have if you're having a conversation with anyone in that regard. So if any of you aren't familiar with it, I'd encourage you all to go onto Business Pulse on the Bank of Ireland website, and it's hugely useful information to have there. But for us, I suppose, the key takeaways is, look, construction is getting back on track, albeit last week, slightly unfortunate, whereby a number of sites were closed in Dublin. So, we are, being cautious and prudent in terms of how we're monitoring that and how we're assessing that. But nevertheless, in industrial engineering, a services sector, retail, funnily enough, is beginning to pick up. You can see that footfall is increasing. Card receipts are actually showing, increased demand for certain sectors there. So look at, we would hope that over the next few weeks that, retailers, construction firms, services sector, in the, industrial engineering, manufacturing, transport, logistics, that these are core areas that Flender is comfortable lending into. So as I said, that just there, wanted to flag that with you guys. So I suppose in terms of our funding criteria update, nothing has changed since the last, I suppose, webinar we've done. So as I said, we still have our specialist COVID-19 working capital assistance fund. They're kind of focusing on smaller ticket loans, 10 to 50k. So again, this could be focused on either a term loan over 12, 24, 36 months. It could be an MCA, as I said, over 30, 40, 50, 60, 70, 80, 90 days, depending on what level of affordability is there. So we do have that available. Our loan facilities, as I said, we can now extend up into six figures. And again, for many lenders in the Irish marketplace over the last number of months, that has proven hugely difficult to actually get capital deployed out there. So essentially, we're happy to extend up into that range. And, we're hopeful over the next few weeks that once the guarantee scheme comes out and once our institutional funders are going to re-engage, that we will be getting back up to the 300k threshold yet again. But I think, we are prudent and we are kind of cautious still that, there is the chance of a second wave. And I think, as I said, we just want to be mindful that we're not overextending ourselves or overextending any clients at this moment in time. Obviously, we are, offering bounce back, schemes. Essentially, it's tailored on the MCA side. Again, so we would focus your efforts perhaps on getting us card terminal receipts and that for any retailers that would be interested in that. Again, our terms are from 6 months to 36 months. This was previously up from 12 months and indeed 18, 24 months a number of weeks back. So we are happy and comfortable going up to 3 years yet again. Our rates, as I said, have dropped throughout COVID. So we've dropped, from previous of 6.45 down to 6.25%. And as I said, that is dependent on the assessment that is carried out by our credit team and is obviously priced to risk. So essentially, we are happy to state that. However, as some of you may be aware, we did introduce the blended rate card. So, on larger ticket loans where we require a chunk of money from our institutional lender, obviously they've put a premium on that. So we are looking to blend a proportion of institutional money with our public marketplace. So essentially, we've put out a number of loans that are on a blended rate card, and most of our clients are happy with that due to the accessibility and the quick turnarounds that are available on it. So, but we do offer the two options. So either on public marketplace with a competitive lower rate card, or if it's a higher ticket item or higher ticket loan, we look at the blended rate on loans over €100,000. And as I said, I think on average we're around 8.9, 9.1, 9.2% in our category A plus for something up to 100k. So quite competitive in that regard. As I said, both public and private funding is now available. So that question did crop up on numerous occasions over the last couple of support webinars. So we do have firepower available to extend private funding. And as I said, it is on a case-by-case basis, and we are trying to provide bespoke funding solutions on each individual loan that does come in. Our application criteria, it stayed much the same. However, there has been slight changes in the fact that we are looking for 12 months rather than 6 months bank statements. And, as you can appreciate, the last 6 months for many businesses has proven very, very difficult. So essentially, looking for just the last 6 month statement would not do the client justice in terms of looking at their overall, trends and indeed their overall affordability and bank account performance. We've extended that up to 12 months. Tax clearance cert is the usual. Last year's company on a bridge file accounts. At this stage, most people should be trying to prepare their 2019s and getting them filed and sent in to revenue. Alternatively, draft accounts or up-to-date managed accounts are the backup. But as I said, at this late stage in the year, it should be a prerequisite that clients have those prepared or in the process of getting them prepared. Useful information, as you all know, debtors, creditors book, any government contracts or any blue chip contracts that clients are working with, perhaps like a builder working with a Cairn Homes or a large developer, that can give supporting evidence of that. And we always emphasize the importance of trying to package the loan application as strong as possible. So that is always useful. On the MCA, obviously we look for the last 12 months. The MCA statements, again, looking at pre-COVID levels and then post-COVID levels. So again, we will look at businesses that have reopened in July, looking at their weekly MCA statements. So if they've opened on the 4th of July, we would look for the last number of weeks MCA just to see what the growth trajectory is like and what level of turnover is like, and then trying to compare and contrast that to pre-COVID levels. And indeed, and evidence, and I think Colin will talk about this himself, we have seen businesses that have seen a huge uptake in card transactions in a post-COVID environment in comparison to pre-COVID. So we're more than happy to look at that. In recent days, we've helped a restaurant in North Dublin. We've helped a retail outlet down the country in Limerick, and we've also helped a hairdresser as well in the centre of Dublin as well. So, and again, they will come back to us as repeat customers over the next few weeks as we top them up with the recurring cash flow that they require to continue into the new normal, and as I said, prepare themselves for various different requirements such as PPE and various screens and stuff like that. And then finally, obviously, purpose of funding on a COVID-19. So what have they done? Have they put the relevant PPE, social distancing, and all that type of information is hugely useful. And I'd encourage you to get as much, even perhaps photographs as well, which as I said, some of our brokers have kindly provided us. So just to tick the box that they are complying with it, because I think from a credit perspective, and Colin now will probably talk a bit, we want to get comfort that these guys are complying, that they're not kind of, I suppose, taking anything for granted or being complacent, that if an inspector goes in or perhaps if Gardaí goes in, they're shut down straight away, because then obviously we are impacted by repayment capacity. So we want to ensure that people are complying with the guidelines as laid out. So without further ado, I will pass over to Colin. Colin will give us an update on what he's noticing on the credit side and trends there perhaps he'd like to share with us. So over to you, Colin. Thanks.
No problem. Thanks, Colin. Okay, guys, so just going to give you a quick breakdown of what we've seen, just, I suppose, on our forbearance and on our loan book, just to give you, I suppose, an indication of what we're seeing on our own loan book, which you can probably bring into your own local environment. It'll be a subset of that. What we saw over May, June, July was 40% of clients needed assistance in May, 26% of clients needed assistance in June, and all the way down as far as 13% of clients needed assistance in July. And that assistance was a blend of either payment breaks or reduced repayments. Those reduced repayments could be on a 3 or a 6 or even a 9 month period, subject to the sectors that they're in. What we're seeing a lot of is clients right now that, because of the supplement coming in from the government, actually their cash flow right now is okay, and it's actually, you know, perhaps even better than a lot of other times, because we're seeing that they've looked at their cost base, they've made significant reductions in their cost base over the COVID period, and they're coming back out of COVID back into some level of trading with a much reduced cost base and this supplement coming in from the government. So their cash position right now in a lot of accounts that we're seeing is actually okay. That's on our existing clients that are with us anyway. Of course, there's always going to be clients who need bespoke arrangements, and clients who, you know, we have a couple of pubs who are just not open yet, and, you know, we'll extend out forbearance as needed for those guys. With guys who are in the event management industry, obviously those guys need. We have, I think we've maybe 5 or 6 of those businesses on our books. I think 4 of them are actually okay and they're back to BAU relatively, and 2 of them needed more assistance. So again, it's very sector specific as to who needs assistance and who doesn't. What we're seeing there is construction, haulage are really bouncing back well from the applications that we're seeing coming in. Those businesses are they're fine. Those, as long as we can get confirmation that their existing contracts are being honoured and are going to continue. That was the initial concern and query we had. But moreover, I think every contract that has been sent in, when we've checked up on it, every contract has been honoured. You know, so that's really good. Where obviously we're seeing a big struggle to help clients, small car sales businesses, small plant hire businesses, small sole traders, where it may be 1 or maybe just 2 people in the operation. That's where we're struggling to assist clients. We don't see the bounce back as strong for those guys at the moment. So we're struggling to assist those guys. Where those small businesses have a potential MCA facility, that's where we're finding a lot more comfort level with those guys. And as Colin was saying, the volume of MCA deals that we've done over the last 4 to 6 weeks has really stepped up compared to what we have done in the previous 4 to 5 months even. So it's really taken off from that perspective. From a credit perspective, it puts us in a really good position in relation to having a certain level of comfort over that repayment method. So all but short of a lockdown, we're going to get the repayments back in. So that's a real comfort level from our perspective. On the client's perspective, what we're offering them in exchange for that is 20 to 30 to 40,000 euros quarterly. And clients are really loving that. So it's actually a release of working capital to those clients every quarter. We're keeping it small and short and tight and a little but often method right now, because we have to, right? It's we're still post COVID. We don't know if there's going to be a second wave, a second lockdown, as to what level it's going to be. A lot of businesses that are coming to us aren't going to be on the essential services list as well. So we have to be very mindful of all those factors. So just to give you an example of who we have supported, there's a pharmacy on our books, there's mini markets on our books, there's bar restaurants on our books. What have we got coming up this week? We've got a restaurant in Parnell Street in Dublin. We've got another mini market in Limerick. We'll have another hairdressers done by the end of this month as well. So that's kind of example of guys that we can see. And what we've seen with those guys is literally since the lockdown was over, we're monitoring their weekly turnover, their weekly position, and we're absolutely comfortable to give those clients 20 to 30 to 40,000 euros and get them back up and running. And them being able to ring us and say that we want to move this to from a 20k quarterly to a 30k quarterly because their turnover is increasing, or from a 30k quarterly to a 40k quarterly because their turnover is increasing as business returns to BAU. That's something that we're actually able to do and comfortable to do because we can see that trend continue to increase with them. And from a risk perspective, you know, doing it over a quarterly basis and doing it over a short-term basis just reduces our risk, but also increases the release times for the clients on an annual basis. So that's really interesting, and really, I think something that will really take off over the next 6 months. and Colin has gone through what the criteria is in relation to what we want to see from the application side. And of course, if there's any bespoke deals or any strange ones, just drop us a line, give us a phone call. We'll talk through it, and we'll let you know what specific documents or what specific help we can offer that specific client. As I was saying there in the trends, the term loans, approvals are coming good on the construction, engineering, civil, electrical, accountants, manufacturing. Those are the main sectors that we've seen that we've been able to approve post-COVID. Declines, as I said, were car sales, small plant hire, young companies. We have a lot of young companies coming to us, and just not a lot of assistance we can offer young companies if they don't have the MCA facility. If they do, well, absolutely, there's something we can do to help those guys. I gave you the breakdown of what kind of businesses we're doing on the MCA front, and that's literally all I had prepared. And I'm staying on for a Q&A so we can talk through term loans or MCAs at the end. Back to you, Col.
Thanks, Colin. Great, appreciate that. So yeah, look, as I said, guys, just have up there just a brief overview of merchant cash advance. As I said, how it works. So we're more than happy to look at retailers, hospitality, restaurants, people that are in that post-COVID opening sector now at the moment. And as I said, look at over the next few weeks, Colin and his team will be hopefully trying to get as many of those out as possible. So I suppose moving on, again, I had this up while Colin was talking. So, we have, assisted, some bars, some restaurants, some retailers like hairdressers and that over the last few weeks. So look, what we always try and do is we would put every application through, as I call it, the washer for, essentially our bread and butter term loan product. If it doesn't match the criteria for that, it then goes into a review of, okay, can we look at MCA? And in most circumstances, we have seen where a term loan has been maybe declined, it has actually formulated itself into an MCA approval. So, rest assured that, the guys do look at all avenues in terms of trying to get a yes to your clients in that regard there. So look at, hopefully over the next few weeks, we'll see plenty more of these coming in from you guys there. So I suppose just to flag with you as well, to assist with the launch of the MCA from Flinder's perspective, we have a new MCA landing page, and I encourage you all to log on to that. So it's www.flinder.ie/MCA. And you'll see from there that there's a really nice quick loan calculator available that Colin and his team have designed that will give you just a quick synopsis to say, look at, how much per month is being turned over on the card machine. You can populate that in, you can set, how long the business is actually operating, and then, quickly populate the company's details there, and one of us will give you a call back, once you actually complete that form. And again, it will spit out a result to say, yeah, look at your turnover is X, we can extend, 7, 8, 10 grand on an MCA over, a certain period of time. It'll give you a guide and a reading in terms of saying, yeah, this is something that we want to progress with. So I'd encourage you all to have a look at that, and perhaps let us know what your feedback is like on it. And as I said, we're really happy with that. Actually, this morning as well, one of our IT developers has just given me a snapshot in terms of what the partnership portal will look like as well. So we're trying to divvy up the difference between term loans and MCA loans on the partnership portal for you guys, to make it as seamless as possible. And I think from working remotely over the last number of months, the age of digital has never been as important. We are trying to encourage more and more people to start using the portal and move away from attaching stuff in emails and stuff like that. So as I said, stuff doesn't get lost. So I suppose lastly, a couple of useful news links I will share with you at the end. So again, it goes around the SME recovery roadmap, some of the live statistics from the SPCI. Again, looking at the UK as well, when you compare and contrast the non-bank sector over there in comparison to over here, hugely different. I forgot to put in RT one that was from last week as well, but I will populate that afterwards, and I'll share this with you all as well. And as I said, it's just useful to compare and contrast the UK and the Irish government's approach to the government schemes, and indeed the coronavirus loan schemes as well. And I've kept a close watch on that. And when you compare and contrast, like to give an idea, there, Starling Bank have delivered over 654 million in CBILS, loans in the last kind of 2 to 3 months. There isn't a lender in the country here that has come anywhere near to that, or even a tenth of that in terms of what has been deployed. So it just shows you the staggering gap in terms of what has happened here and what has happened across the pond in the UK. So look, I forgot to add in the RT one and the second one as well. So we'll add that in afterwards. So look, thanks for listening. Just gone 11:29, and we said we keep it short and snappy. So look, if you have any questions, happy to take them. And Colin, thanks to him, has stayed on as well. So from a credit perspective. So thanks for listening, guys.
Cheers.